we didn't spend a lot of time on trade war, and I do want to spend some time on this. Look, I think we're in a really tough place right now. I think the U.S. administration has decided that a trade war is a good thing. He's actually been public about the comment that a trade war could be won. But I don't think that they really understand that trade wars are never good for anybody. What a great example of this is that when you see a trade war, the assumption is that you are layering in tariffs to stop importing of a cheaper good from another jurisdiction, so that your industry can be more competitive and become more attractive in terms of selling their product. But what actually happens when this kind of tariffs come in place is that the prices increase for foreign goods, and then therefore the local players actually see it as an opportunity to increase profit margins by increasing their pricing. So very seldom do you actually see the local producers stay low in their pricing and foreign producers just get impacted, so you see more market share win, which you see as profit margin improvement at the local producers. But that's not good, because all of that means that it's going back into the consumer's hands. So
you end up with cost push inflation.
That's exactly. Yeah. You basically, the consumer's paying more, and it acts as a tax to the system, and it actually is going to cause inflation and meaningful inflation risks. And so this is never good for a society, in any society. And so there's no ability to win a trade war. It just never happens. And what I think that the real risk now we have is that all of the tax cuts that we saw coming into the United States, through in the last year for corporations, and we'll start to see this tariff war effectively start to cause a taxation effectively like event for individuals, and I just think this is going to ultimately really hurt the consumer. It really is going to hurt inflation risk, and then it's going to cause the Fed to start to have a real dilemma on what they're going to do here, because now we've got a steady, measured sort of rate increase environment that they'd like to sort of apply, but now they're starting to deal with real inflationary risks that could actually accelerate that. And as we always go back to, is that bull markets are never, kind of slowly die. They get shot by the Fed raising rates too quickly, and that's where we're really in a tough place right now. I think the Fed's actually in a really, really place that I would be very concerned about.
What are your thoughts on the idea that this is really an extreme bullying tactic on the part of the administration?
We may look back in history and see this as just a short-term blip and something that we'll talk about at times, and it doesn't actually turn into a big all global trade war. But it doesn't seem like the U.S. or China are backing down from each other, and every country is sort of coming up with their tariffs. And so, as I say, it's right now, I think the president's listening to certain people that think this is a good idea, and he's got them in their ear right now, and in his ear, sorry, I should say. So I think the other jurisdictions, other countries around the world are not willing to be kind of bullied backwards, and they're showing that. So I would say for sure I don't assume that China will back away from their position as well. And China has become such an important and meaningful trade partner globally, but also to the United States. I think that they're going to see this as an opportunity to actually wield power as opposed to step back from the U.S.'s power. So I don't see this as actually something that will back away unless the U.S. backs away.
It seems like an odd situation. Seeing as the U.S. and China have a really what's been a symbiotic relationship for a very long time, and then of course the U.S. has benefited monetarily from China being a big buyer of its bonds. Mm-hmm. That seems to be threatened right now as well, does it not?
Everything. I think that it's still in China's best interest to continue to be a buyer of U.S. treasuries and continue to. One day it won't, but today it's still in their best interest. And one thing we know about China is that they have a much more structured approach because of their non-democratic way of
right.
They're effectively able to
unilaterally
drive, make decisions. And so I don't see them being more emotional about this. I just see them seeing this as an opportunity to not back down to an American kind of position on this trade. And so I see them as actually, much more aggressive in kind of doing what's in the best interest of China throughout this whole process, as opposed to kind of stepping back and saying, okay, we'll sort of agree to certain elements to support the U.S. It has been a symbiotic relationship, and for the most part, any leader in a developed country would look at China as a positive in many regards to support their economic growth. I think the U.S., as you know, the challenge we have is we have an administration that believes that the elements of what China is growing at are areas where U.S. is falling apart, deep manufacturing, low wage jobs, things like that. Whereas I think most developed countries will look at this as an opportunity to improve those types of industries and move into a newer, higher end industries. And I think that unfortunately we've got it sort of backwards in the United States right now.